Hello and welcome to the weekend market update. Today is 19th of November. So we'll look at the markets from daily, weekly, monthly perspective just to see what sort of trend we're seeing. So you're looking at the daily chart of S&P 500. So what we're seeing is that it had traded inside this box for a number of weeks and then broke to the upside. And then this week we saw a retest of this support. This is 3900. So far, this level is holding. We also see that the two moving averages, the 20 and 50 EMAs on a daily basis, they've crossed and they're moving higher. So we expect market to find support around 3900 as well as the moving averages. So these two moving averages should provide any support to the downside. If it falls below the moving averages, then the technical picture would start to change. But so far we're seeing higher lows and higher highs, so that's positive. That's positive. There's this 200-day moving average. This consolidation looks very much like it's gathering some momentum in order to be able to deal with 200-day moving average. I think it's inevitable that it at least tests this 200-day moving average, because we saw that there was a big rejection at this level. But there's a slight difference between what's happening now versus when it last tested it, because from mid-July it went straight up from this level to here. Within 1 month it was up 16%, or this move was about 600 points without any kind of meaningful pause, and then it tried to overcome this key resistance, and I think that just was not going to work. But this time what we're seeing is that move up, big correction, move up, consolidation, and I think this kind of a price action or pattern has a higher chance of dealing with this resistance. So if it's able to overcome this level, this is right now at 4067, then this area, this high, this green high of this green candle, which is around 4120, would be the next area of resistance. So it'd be interesting to see if it gets up to these levels, whether or not it's able to negotiate with them, or whether we get rejected and then we have another big leg down. But for the time being, price action looks good. It's moving higher highs. Momentum indicators are also in positive territory. RSI is above 50, MACD above the zero line. So that's looking positive. You can see right here when MACD was above the zero line and RSI was above the 50 level, we saw positive price action. Let's have a look at the weekly pattern. So on a weekly basis, you can see this, high continues. This week was a indecision candle. This candle is indecision candle, which is not a bad thing, but it's just below this weekly 50 EMA. So that would be, that would provide some resistance. If I look at the weekly momentum indicators, they're still looking weak. MACD remains below the 50, below the zero line right here, and RSI has come up to 50 level. This 50 level is very important because you can see from the COVID lows, when RSI moved above the 50 level and stayed above the 50 level, good thing happened to price. So this is definitely positive, but we've seen since it fell below the 50 level right here, and it stayed below the 50 level for much of this year. With the exception of this couple of moves up, it stayed mostly below 50 level. So that's why right now, even though it closed just above 50, we need to see whether it can stay above 50. I think that's the key thing. If it falls back below, just like these two previous times, then obviously, this momentum which had been improving will start to weaken. MACD has crossed, but remains below the zero line. So we need to see MACD move above. Only when MACD goes above the zero line, then we can expect to see a more sustained kind of a rally. But on a weekly basis, I would say the technical picture is neutral to negative at the moment. If I look at the monthly chart, just quickly, just to see what's happening. So on a monthly basis, it has come back to the monthly 50 and tested this. So this was the minimum requirement. We had this massive run up, increase in valuation prices had gone way above the monthly 20 and 50. So this correction brought it back to the monthly 50. And what we see is that typically it does come and touch the monthly 50, and which is what it has done. But sometimes it also falls below the monthly 50. Now, looking at the monthly momentum indicators, RSI has now come up the monthly 50. So that's good. But RSI is coming from a lower low. So ideally, we'd like to see RSI go above this high. This level was 53.15. So if RSI is able to establish a higher high, that would be positive. So we're not there yet, but we still have a number of days left in this month. So we'll see how the monthly RSI pattern becomes. MACD continues to move lower. Now it's heading towards the zero line. Now if it's going to turn and make a cross, it should happen near the zero line. You can see previously it had turned above the zero line. So it is coming to an area where you can turn. So it hasn't done so. So the monthly picture is still kind of, I would say, negative. Price is currently trapped between the 20 and 50, so it needs to get back above the monthly 20. So we'll see how the monthly pattern shapes up by the end of this month. Let's look at NASDAQ 100. So we'll start off with the daily. So daily, we can see that it's been trading inside this box. It's making an attempt to get out of this box. It tried, but then it dipped back below. So it's consolidating, which is positive. It's not a negative thing. We can see higher lows and higher highs, so that's good. You can see the moving averages, the 20 and 50. They are starting to move higher. They haven't crossed yet, so they will provide support. Momentum indicators are improving. You can see RSI is above 50 level. And MACD is just crossing above the zero line. So that's good. The technical picture definitely for NASDAQ is not as strong as S&P 500. I would say it's beginning to improve on a daily basis. On a weekly basis, it remains below the weekly 20. It found resistance this week. RSI is below 50, MACD below the zero line. So the weekly picture to me is negative. So we need to see a lot more improvement before we can say that perhaps this rally can be sustained over a longer period of time. I'm not seeing it at the moment. If I look at Dow Jones Industrials, we look at it on a weekly basis. You can see the Dow has been going higher highs on a weekly basis. Has now gone above the weekly 20 and 50, which is good. It's now come up to this previous high. If it's able to close above this high of this red candle, 34,281, that would be really, really positive. You can see RSI is above the 50 and holding. MACD is moving higher. It hasn't crossed the zero line, but it's heading towards the zero line. So momentum indicators are definitely much better than NASDAQ and S&P 500. On a monthly basis, what we see that monthly RSI is above the 50 level, which is good. You can see that it looks like it wants to turn above the zero line. You can see at the moment the price is above the monthly 20. So the monthly picture is looking better, but we'll see what happens at the end of the month. We still have a number of days. So Dow definitely is looking much better on a daily, weekly, monthly basis from the other averages. Russell 2000 on a weekly basis. So this was the only index that didn't establish a new weekly low right here. It held the June lows. So that's positive, but it's encountering some problem at the weekly 20-day moving average. So it's currently trapped in between those two moving averages. RSI has gone just above 50 level, but it's just because previously, it did try one more time, but then moved back below. So we need to see RSI hold above the 50. MACD cross, but is below the 50 level. So I would say this is neutral at best because the price action is, not that strong at the moment. The moving momentum indicators are kind of, neutral at best. I would say negative for MACD, and I would say neutral for RSI. If I look at the monthly chart very quickly, I can see that it has corrected to the 50-day moving average. It fell below the 50. So this massive run up, it has corrected quite a bit. That's positive. You can see MACD has come down from a very high level, and it looks like it wants to cross at the zero line, at the zero level, which is positive, which is going to be really, really positive if it can do so. You can see previously it turned at the zero line, turned at the zero line, turn near above the zero line. So it is in the right location. Whether it can do so is a separate matter. It could very well fall below the zero line. If that's the case, that would be really, really negative. So we'll see whether or not it's able to make a turn and then start moving higher. That would be really bullish. If you look at monthly RSI, it's just below the 50 level. So you see the double bottom pattern. So if it's able to get back above this 50 level on a monthly basis, that would be positive too. So there are some encouraging signs, but not there yet. If we look at other markets just to see what's happening, we'll start off with dollar. So on dollar daily, let's move some of the moving averages out. You can see that big decline, now like a bear flag pattern. So it is oversold if you look at the RSI and MACD. So you can see that there is room for some bounce. So resistance would be at this level around 108.22, and then at this downtrend line. So as long as it remains below this level, the daily trend would remain negative. Weekly pattern, so there was this uptrend line right here that got breached. So that's negative. Secondly, so right now we're seeing price acceptance below this uptrend line. Secondly, momentum indicators, we can see that RSI has crossed and then it's moving lower. So momentum is weakening. Sorry, this is MACD. RSI fell below the 50 level. You can see from this point on, RSI was above the 50, price moved higher. So for the first time, we see that price has fallen below the 50. So we need to see whether or not it finds acceptance below this 50 level. If so, then I would expect lower prices to sideways action in coming weeks. So this is, even if it moves above the 50 level but then falls back below, that would be negative. So we'll see how things evolve, but at the moment the weekly pattern is changing. If we look at what's happening in the yields, because that's very important. So let's look at the Fed Funds futures. March futures closed at 480. April closed at 494. September, this is June, closed at 5.05. So what the futures is telling us is that Federal Reserve would increase interest rate up to around 5% by middle of next year. If I look at September Fed Funds future, it's at 498. So that's close to 5%. So I'm not seeing any yields above 5% at the moment. So based on the current data that we've received, now next month, early next month, we're going to get the jobs report, unemployment report, and CPI. Now they will provide additional new data, and based on data, I would expect yields to react. So if those numbers are still pointing to strong labor market and CPI is still strong, then maybe these futures can take about 5%. But at the moment, I'm not seeing anything above 5%. Two-year yield, so it started to move higher after the pullback. So it closed at 553. It traded as high as 488, then pulled back, and now it's moving higher again. The 10-year is at 383. So it also pulled back and now moving higher. But 2-year is moving higher moving higher more than the 10-year, so that the spread between the 2s and 10 is increasing right now. So this is showing the spread between the 10-year and 2-year. So this is showing that the 2-year is now higher than 10-year, or put it the other way, 10-year is lower than 2-year by about 71 basis point. So this is quite worrying, because whenever if I show it on a monthly basis, whenever you see the spread widening, it's an indication that we have recession. You can see now it's lower than the spread between them is now bigger than what it was in '06 as well as in 2000. So it's definitely indicating that market is now beginning to expect perhaps a bigger inflation than just soft landing, based on the spreads we see between the tens and twos. So that's the yield. Let's look at the oil market. We'll look at the weekly chart of oil. Let's do daily. On a daily basis, what we see that oil has broken below this level of support right here. So next area of support is around 76. If you look at the weekly chart, you can see the weekly candle looks quite bearish. It has closed below these weekly lows. So that's looking weak. And if you look at the momentum indicators, MACD remains below the 0 level, and RSI is below the 50 level. So that tells me that the oil market is weak, and I wouldn't be surprised if oil ends up making a new low below 76. If we look at VIX, so daily VIX continues to move lower, and that's because S&P 500 is continuing to make higher highs. So the fear is coming out of the market. I think if S&P 500 were to break some level of support, that's when we would see an increase in fear coming back into the market. Like if S&P 500 fell below 3,900, I think some fear would creep into the market that, hey, the current structure is changing. Or if S&P 500 fell below the daily 20 and 50 moving average, so that would be another level of support, which would be around 3850. So if it fell below 3850, then fear will start to creep into the market, and investors would start to look for downside protection, and that's when I would expect VIX to move higher. I'm not expecting VIX to spike to above 35 unless S&P 500 falls below 3500. I would expect S&P 500 to move towards the upper end of this range, 35, but to expect S&P VIX to go up to like 4550, I think something serious needs to happen in the market, and that could only happen, in my view, if S&P 500 were to fall below 3500. But if S&P 500 just breaks the support, then VIX would just keep going higher, move up towards the upper level. Only if S&P 500 breaks the 3500 level, I would see a massive spike. But otherwise, I would see like an orderly move higher, like something like this right here. Because if you look at it, there was a gradual decline in S&P 500. So that's why, in order to see a massive spike, I think S&P 500 needs to fall below 3500. But if S&P 500 just gradually moves lower, then I would expect it to gradually move higher too, without seeing a massive spike in a very short period of time. If I quickly look at the sectors, so this is XLK S&P 500, largest sector in S&P 500. I see gradually moving higher. So if I bring in the moving averages, you can see it's crossing. So that's looking positive on a weekly basis, higher highs and higher lows on a weekly basis. So that was the daily, sorry. On a weekly basis, I can see that momentum indicators are not yet in positive camp. You can see RSI is just below the 50 level, and MACD is below the 0 line. So momentum indicators are not yet flashing buy signals yet. So there's still more work to be done. But on a daily basis, the price action is at least positive, making higher highs. So we'll see whether this translates to improvement in weekly momentum indicators. XLY is the next sector. This is a growth sector. This is basically going sideways, stuck in this box. Momentum indicators are weak. MACD is below the 0 line. RSI is just moved below the 50 level. So this is a growth sector. You want to see growth doing well, but this sector is not. XLF Financial, this is looking positive. Higher highs, consolidating above the 200-day moving average, 20 and 50 weekly pattern. It's come up to the previous high. RSI, weekly RSI above 50, MACD is heading towards the zero line. So momentum indicators are definitely improving, and it's now just near the top of this W pattern. If it's able to close above this level, this would be quite bullish. XLV, healthcare, another big sector in S&P 500. So this is looking quite positive too. It's now at the top of this range. So if it's able to break through this level, it will complete a weekly double bottom. You see weekly RSI is above 50, MACDs crossed and moving towards the zero line. I really like what I'm seeing on this in healthcare. So healthcare and XLF, financial, they look very good, positive to me. And because they have large weight in S&P 500, I think if there is upward push in these two sectors, they will provide upward push to S&P 500. So any weakness in, let's say, XLY will be offset by XLV and XLF. So those two being large group, they're looking quite strong to me. If I look at communication, another growth sector looking very weak. So so this is not gonna contribute positively to S&P 500 just yet, because I can see that the momentum indicators are still weak. But if it starts to turn around and move higher, that would be certainly positive. But the technicals are not positive at this moment. Building materials, so this is also looking positive. You can see it's come up to the previous weekly high right here. RSI is above 50, MACD crossing and heading towards the zero line. Now, this is a defensive sector, valuated sector. You want to see the growth sectors doing well. So, but overall, this is looking positive. It should add a little bit to S&P 500. This doesn't have a big weight, but nonetheless, the technicals are, improving on a weekly basis. Industrials, again, looking positive. It's come up to the previous weekly high. RSI is above 50, MACD heading towards the zero line. So this is looking positive too. Utilities, the weekly, not that strong at the moment. RSI is below 50, MACD below zero line. But price is beginning to make higher highs, so that's good. This is a small sector, so it's not gonna help or hurt S&P 500 in any meaningful way. XLP, this is staples, defensive sector, so it's moving higher, making higher highs, heading towards the previous weekly high. You can see RSI is above this 50 level, moving higher. You can see MACD crossing. It's heading towards the zero line. So I see a number of S&P 500 sectors are doing well, and that tells me that perhaps we might be able to see additional gain in S&P 500. I mean, XLK, you can see XLK is improving. It's not there yet, but XLF definitely looks like it wants to break out to the upside. XLV definitely looks like it wants to break to the upside. So these are big sectors. If XLK can start to move higher, this will push S&P 500 higher. It's just that XLY, which is a growth sector, if this could start to come around, I mean, you could say that it's trying to form a double bottom around this level. That's possible. But if this sector can come around, then I think S&P 500 can push a little bit higher. If we look at some of the stocks very quickly, we'll look at Tesla. So Tesla, let me just move this out. Tesla, you can see that it's been making lower highs, and then now it's coming up to this 61.8 fib. I have a fib drawn from the COVID lows. I've made a separate video on Tesla. I think you should check out for more in-depth detail, but it's coming up to this 61.8 fib level, which is around 171. I think we could get some reaction at that level. Apple, so Apple is now consolidating inside this channel. It's right in the middle, so at the moment it's neutral at best. Now, if I look at the momentum indicators, RSI is at the 50 level. it's neutral, and MACD is below the zero line, so that's negative. So we need a little bit more, so the technical pattern on a weekly basis is neutral at best. On a daily basis, it's improving. You can see MACD is, momentum indicators are improving. MACD is about to cross above the zero line. RSI is above 50 and holding, and it's, the daily 20 and 50 moving averages, they're now beginning to turn, so that's positive. We've got the 200-day moving average. It acted as a resistance previously, so we'll see how things develop in coming days, but daily picture is beginning to improve. If I look at Microsoft is beginning to look better on a daily basis. You can see that it's consolidating above the 20 and 50-day moving average. You can see MACD is attempting to go above the zero line, hasn't done so yet. RSI is above 50, so there are some improvements on the daily basis at the moment. But we haven't seen a higher high. We need to see Microsoft close above this level right here, so which is around, say, 250. If it's able to get back above 250, then it will establish it will take out these resistance levels. So that would be quite positive. Amazon, it doesn't look all that great, but maybe it is trying to establish a higher low. So we have this big drop and then a bounce to this level, and then it's pulled back here. If it's able to get back, move higher, then this could end up becoming a higher low, and that would provide a much that would be a positive structure on a daily basis. And then if it can close above this level 103, then it will also take out this resistance. I could see it forming kind of a higher low double bottom kind of a pattern right here. But on a weekly basis, it's looking quite weak still. But let's see whether or not on a daily basis it can form a structure like this. So we'll leave it at that. Thank you very much for watching the video.